everyone, and welcome back to our weekly commodities update. I am your host Tushar Jain, and today, on 26 June 2023, we'll be diving into the latest developments in the sugar market. Last week, sugar prices experienced a significant shift, snapping their 2 week streak of gains. Let's take a closer look on the factors that influence this downturn. The recent surge in sugar prices offered an opportunity for traders to take profits, leading to a decline in prices. However, it's not just the profit taking that impacted the market. We have also seen a general weakness in the broader market and lack of global demand, which has dampened investor sentiment. Central banks around the world, from the US to Eurozone and Japan, are facing the challenging task of taming inflation without harming economic growth prospects. Unfortunately, achieving this objective remains highly elusive at the moment. In the world of agri commodities, we often see a unique situation where supply and demand are heavily influenced by weather conditions. Currently, the weather outlook remains uncertain, and this has had a significant impact on sugar, which is particularly sensitive to weather changes. However, on Friday, ICE raw sugar prices ended lower as speculators decided to liquidate their long positions. This was driven by positive harvest news coming out of Brazil and the top sugar producer. Additionally, weak demand from China played a role in the decline. The ICE sugar futures for July delivery settled down by around 0.75 cents or around 3% at 24.18 cents per pound, reaching a 2 month through of 24.13 cents per pound. Throughout the week, the contract lost around 8.5%. Similarly, London August white sugar futures dropped by around $16.60 or around 2.5% to $657.30 a ton, experiencing a weekly loss of around 6.4%. Traders reported that speculators are liquidating some of their large long positions as the month end expiry of the July contract approaches. Meanwhile, the largest sugar belt in Brazil is not forecast to receive rain until at least 5th July, which should allow the harvest to progress smoothly. On top of that, the weakness in sugar demand from China, the world's largest sugar importer, has further weighed on prices. China's Customs General Administration reported that May sugar imports plunged by around 87% compared to the previous year, totaling only around 40,000 metric tons. The ongoing sugar harvest in Brazil is also contributing to the downturn pressure on sugar prices. According to the latest report from Unica, Brazil's sugar production through May 2023 has increased by around 37.7% compared to the same period last year, reaching around 6.9 million metric tons. Furthermore, the percent of sugarcane crushed for sugar has risen to 46.9% from 40.5% last year. Looking ahead, Brazil's year 2023-24 sugar output is expected to climb by around 5% compared to the previous year, reaching 38.9 million metric tons, according to the forecast made by CONAB on April 26. The recovery is attributed to improved weather conditions after adverse weather impacted the previous season. On a positive note, Brazilian sugar and ethanol giant Copersucar achieved its second largest net profit in year 2022-23, with its trading unit Alvin claiming around 30% of global sugar sales during that period. Shifting our focus to India, the country's stalled monsoon is like to gain momentum in the next 3 to 4 days. This could benefit rice, soybean, cotton, and sugarcane growing regions in the southern, central, and western states. On another note, Egypt's strategic reserves of sugar are sufficient for 6 months. The strength of Brazil's real, which is currently near a 1-year high against the dollar, continues to support the natural sweetener This discourages export selling from Brazil's sugar producers. From a technical perspective, sugar prices remain on a strong footing given the gains from the previous session along with upcoming July 2023 option expiry. However, there are indications that sugar prices in the United States could start to fall from the elevated levels of the last 3 years. Analysts believe that the better weather forecasts are necessary to avoid any problem with local production. Speaking of weather concerns, recent times have been marked by worries related to El Nino weather event. The phenomenon is expected to lead to drier than normal weather in major Asian producers such as India and Thailand, potentially curbing sugar production. Additionally, El Nino could bring wet weather to the center South Brazil, which may disrupt the ending of the cane harvest. Finally, in recent news, monsoon rains have finally arrived in India, the world's second largest sugar producer. However, their delayed arrival could potentially impact sugar planting. Additionally, there are forecasts for rain in Brazil's main sugar region, which could further disrupt the sugarcane harvest. So that's all for this week's update on the sugar market. Remember to stay tuned for more insights into the fascinating world of commodities. If you found this information valuable, don't forget to like this video and subscribe to our channel for more updates. Thank you for watching and we'll see you next time.